Good morning, guys. It is Thursday, March 6th, 2025. This Bathrobe business. I have real non decaf coffee here. I've got the news. We're back here in the morning. What's going on? It's good to do morning casts. I really do like them a lot because I feel like you preempt the market. Actually, there's a 50-50 chance all of next week will be morning podcasts and not late evening ones, just because my schedule is a little bit shifted next week. I'm still not sure if that's going to happen, but 50-50 chance. So this is the last video of this week, but next week you may see me in the morning. You may see me in the evening. You may not see me at all. Maybe this is the first time you're watching and you're never going to watch again. So, hey, whatever. Let's jump into the news. So it's just been 12 hours since we last spoke. Actually, I think less than that. But there's a couple major shifts in the job market that I want to report on. So let me share this tab. Okay, so U.S. unemployment announced 172,000 layoffs in February, up 245% from January, and the highest month count since July of 2020. So COVID numbers. More than one third of the total came from billionaire entrepreneur Elon Musk's effort to reduce the federal headcount. Challengers put the total of announced federal job cuts at about 62,000. So obviously a major shift in the private sector, the public sector, I'm sorry, with major cuts coming from there. It will be interesting to see what happens with the jobs report tomorrow. Remember, these are February numbers. The jobs report tomorrow are February numbers. I don't trust ADP, but this is very interesting to see where a lot of these losses are happening. Most of this article just talks about that, how the private sector hiring grew by 77,000 in February, and retail saw 38,000 cuts. So there's multiple sectors here that are cutting, but clearly a major spearhead of this is the federal workforce. Now, a big question is going to be, are these cuts really going to continue? So this will be interesting to see what happens with GDP. The public sector is part of GDP because obviously these people are employed. They're getting an income. They're buying things. They're selling things. This will cut to GDP. The interesting thing will be is if they'll continue. A lot of times with these cuts, you go for the low-hanging fruit first. And so far, there haven't been more major announcements from Doge since those initial ones. So there could be a chance that a lot of the push for cuts are going to happen quickly in the first couple months, but then sort of start to taper off. So far, since the last round with the IRS, I haven't heard of any more cuts, especially I haven't heard of anything coming out of the Defense Department. That was supposed to be a major one where we were going to be seeing up to 40% cuts in the next 5 years. So far, that has not come to fruition, despite the fact that there have been internal rumblings from Hegseth himself sending out memos that, hey, no, we're going to be facing cuts, prepare yourself, et cetera, et cetera. So we'll wait to see what happens. But this will probably be a major force in the job sector if it does continue. Now, to counter the point, actually, most interestingly, jobless claims are actually down for the month of February. So initial jobless claims dropped, beating expectations of previous numbers. So despite the fact that we're facing more or less mass layoffs, the job market is actually staying incredibly strong. It'll be interesting to see what happens with the unemployment rate tomorrow. But there were only 221,000 jobs that were jobless claims that were filed. These are initial jobless claims versus the estimate of 234. That's a fairly good number. That's a very consistent number we've seen throughout the strong job market. So overall, the jobs market is remaining strong despite all these major layoffs. Next thing I want to talk about is let's talk about Macy's real quick. So this is a story we've been following because I used to work retail, so it's near and dear to my heart when a company is about to go bankrupt. I don't think Macy's is about to go bankrupt, but as we've talked about on this channel before, they are constantly fighting off activist investors, and now there's another one. So Ark House and Bridgegate, I can't remember the other one name, but Ark House for sure came at them last year trying to take over the board. They did actually gain seats on the board, just not controlling interest. They wanted Macy's to sell off most of their major assets. Now another one is coming for them as well. This one is Barrington Capital, essentially suggesting the same things. I don't believe they have seats on the board yet, but eventually suggesting the same thing: closures, cuts to spending, et cetera, et cetera. However, Macy's turnaround is starting to take shape. So their 50 core stores, the ones that they've been focusing on in this turnaround, they've done major investments, major improvements, were actually outperforming all other Macy's stores. So their revenue is starting to turn around. A lot of the other peripheral stores are what's dragging them down. So they did actually beat on earnings per share, but they did miss a little bit on revenue, ever so slightly. Now, despite the fact that it was a really strong retail season, that last push in the last quarter of December numbers did kind of end up hurting a little bit because they came in underestimates with multiple retailers. So overall, Macy's isn't doing that bad, but they're still fighting off a lot of this investment. It'll be interesting to see what happens with tariffs here in the next couple quarters of if that will affect Macy's bottom line. Now, with Macy's being a premium selling more premium products, especially at their high end stuff like Bloomingdale's, it's probably not going to affect it as much as it will like retailers like Walmart. The more high end users, customers don't really notice slight increases in prices. However, any increase in tariffs is still potentially a drop in sales. Now, to counter that point, let's look at what Walmart is doing. So, this is interesting because this highlights a point I made in last night's video, and I guess the previous night's video as well. For a while now, we've talked about that Trump believes that tariffs are not going to cause prices to go up in the consumer markets because he believes that the U.S. market is a premium market, that people are going to buy into it one way or another, and that manufacturers are going to be the ones flipping the bill for it at the end because they're going to cut costs. So Walmart asks China suppliers for price cuts on Trump tariffs. So this is already kind of starting to happen. Now, interesting thing is when Walmart asks for a price cut, they get a price cut. Walmart is so large and so powerful that when they want something, they get it. And if they don't get it, they move on to a different supplier. It's actually not just Walmart that does this. Walmart just gets a bad rap for it because they're the biggest. But Costco operates in a very similar model. I can't say for Target, but I know that both Walmart and Costco operate from very aggressive standpoints. So if you want to be in our stores, this is the price point you have to hit. If you hit this price point, you get to be here. If you don't get to be in the store. So there's a good chance that they're going to get these price cuts. And this is essentially what Trump's theory is that one way or another, the market will find a way. Now, so far, Walmart has only asked for about a 10% cut with the first round of tariffs. It'll be interesting to see if that happens with this now second round of tariffs or if they're going to eat the costs on this one. But I don't think prices are going to surge as astronomically as we anticipated, especially with a company like Walmart. Also, more interestingly enough, is a 10% obviously isn't the full 20 that we've just come into effect with now, but only a 10% increase in cost isn't as noticeable to a consumer as it is 20%. So even if Walmart only keeps 10% cuts towards its manufacturers, they may not even eat the cost of 10% because if your cost of goods goes up by 50%, it's not as noticeable as if it goes up by $1. Next story I'm going to cover. Let's talk about AI real quick. So Alibaba has deployed a new AI that it says is rivaling DeepSeek. Like I usually say, I don't try to cover other markets as much as I try to cover U.S. markets, but obviously AI is one of those global markets that we have to talk about. So it seems like the AI war in China is just beginning, same way as it did here a couple of years ago when ChatGPT launched. Everybody was launching their own AI. Microsoft, Amazon, Grout, Grout's, I guess, Grok is a recent one, but everybody was launching their own AIs. The same thing seems to be starting in China now. And this isn't actually that uncommon. China is actually a highly competitive internal market as well. There's something like 70 electric car manufacturers in China. We really just have a handful. So whenever they go into a technology, especially with the political system they have, they try to spur as much competition both internally as externally as they can. So it makes sense that they're probably going to have 3 times the number of AI companies that we do. Now, this article doesn't talk too much about the technology. I wish it would. All it's saying is that while it's not as robust as DeepSeek, it can't do as many things in regards to coding, and some of its language models are a little bit weaker. It's performing incredibly well in tests. It doesn't talk about the technology. It doesn't talk about what kind of chips it's using, and it doesn't talk about what kind of effects the new tariffs are going to have on it. But potentially, if we believe what DeepSeek has said, and that they do use more low-end chips for their computer processing, we can assume that the same thing is happening here. It's not the best news for NVIDIA because that means they don't need to be purchasing their most high-end products. But it does also somewhat guarantee some stability to NVIDIA because even their low-end chips are still NVIDIA. We'll wait to see what happens with this development. I'm expecting to see more and more companies come out with this. But so far, at least 2 of the biggest corporations in China are now AI powered. Next story. My favorite subject, gold. So, South Korea's mint is grappling with gold bar shortage as supply constraints bite. So, South Korea literally can't keep up with gold demand. What's interesting here is South Korea has faced a few rounds of instability and inflation. They've had to impeach their president. There's, tensions with the United States in regards to tariffs. There's a lot of instability, and people have gone to gold as a refuge. Now, this was a story that I kind of missed simply because I've known that Russia has invested heavily in gold, Iran, China, overwhelmingly. It's one of the things that has driven the gold market over the last couple of years. But here we are, South Korea, and it's another one. I also didn't realize how prevalent it was in the society. They're one of those countries that actually has gold bar vending machines, the kind of stuff you hear about in Dubai. That's not for luxury purposes. That's for investment purposes. They believe that this is a safe haven, and that's why they're flooding into it. And given the record demand, the mint literally can't keep up with it. There's shortages, there's empty vending machines, and people are buying it at a frantic pace. Now, this will drive up the cost. This is why I say that gold is a safe haven, because right now there is so much instability in the market. Inflation is essentially baked into the market. It's a global market. The gold is going to be a fantastic investment. I think much more secure than something like crypto. I'm not a fan of crypto. I think it's just numbers on a page. If you do invest in crypto, obviously Bitcoin is the only one that you should look at. Ethereum, from maybe a technological standpoint, works, but as far as an actual currency, I think Bitcoin is the only one that is even remotely viable. But even then, I think it's kind of a straw man. I think it's just a house of cards that's waiting to collapse. Gold, on the other hand, has been tried and true since essentially the beginning of time. And other countries are definitely investing heavily in it. So here in the United States, I think we need to be more strategic with gold as well. Granted, we have been, even as Costco often outsells, traditional markets when it comes to gold. You can buy gold Susie bars at Costco, and a lot of people do. And that number actually keeps growing year after year. That's pretty much it. Those are the stories of the day. So I hope you guys have a productive Thursday. I won't be back here until Monday. We'll see what the jobs data has in store for us. I'm cautiously optimistic that it may be better, because now we have two indicators, both initial jobless claims and yesterday when we had very strong hospitality and leisure numbers from ADP. I think the job numbers actually might be better than what we anticipate. So I'll see you guys on Monday. I hope you have a fantastic weekend. Bye.